I think actually a market that's been really interesting lately are interest rates, because you're probably sick of, the past, I don't know, decade or so where we had 0.00001% interest for a long time on short-term yields. And then suddenly after COVID, yields shot up, okay? And then things have gotten great for people who are savers. In fact, proportionally, it's been a huge move. Of course, we haven't seen anything like we did in the 1970s where we had 15% rates or higher. But if you think about it, going from 0.7% to around 5.2 on the 30-year Treasury bond, proportionately, that's a massive, massive historic move. Now, what I'm showing you here in this chart is the last time that we were bullish on Treasury bonds and expecting rates to decline. And the reason I wanted to show you this chart is just because it has a really cool thing from an Elliott Wave point of view. There's no such thing as guarantees in the Elliott Wave world, of course, but there are things that get close to kind of these checkmate kind of situations, and this is one of them, so that's why I wanted to share it with you. So what we have here is we have a motive wave up, this wave A. Then we have a corrective move, okay? It's a three-wave move, A, B, and C. And notice this triangle here in wave B, okay? This is a type of corrective pattern. So we have A, B, C, D here. This is a contracting triangle. Now let's talk about alternative ways of labeling this. Let's say, okay, let's pretend that maybe this move here was the end of this entire sequence, this entire corrective move, and that we're gonna move down to all new lows, all right? Let's just propose that as an alternate scenario and try to see if we can count it. Here's one down, and then we have a triangle 2, and then we're going to move down and start wave 3, and we're going on. Well, we already have a problem because second waves cannot be triangles, okay? There's lots of different patterns they can be, but triangles are not one of them. So because of that, I really love this particular scenario where you have a triangle inside of a three-wave move, because then it gives you just a lot of confidence that you are in fact dealing with a corrective move. So this entire move is corrective with very high odds. And so what EWAVES was saying was, okay, at this point, we should move higher and we should ideally take out this high. That's all it's calling for though, just take out the high, and then, anything beyond that is up to chance. So that move there, I drew a little arrow here, hand drawn, just showing wave C moving up and taking out wave A.